Welcome back everyone to another NQ market recap. These last 24 hours have been crazy. The market has dumped over 1,000 points. If you're new to my channel, my name is Jake and I make daily videos on ICT concepts and market recaps. So if you like that kind of thing, definitely consider subscribing. I will show you stuff on this channel that no one else will show you on the internet. So definitely stick around. Now, you might be wondering, why did this happen? Well, I see a lot of people are saying Deepseek did this and all that stuff. But I'm going to show you behind the scenes on what institutional order flow was really doing behind the market and how you could have possibly anticipated this move to happen. So with that, if you like this type of content, definitely consider subscribing, leaving a like, and joining my completely free Discord. The link to that is in my description. Alright, so at the end of the week last week, we ended up getting two giant SMTs where the NASDAQ made a lower high, and you can see here the S&P ended up making a higher high with each of these highs. Then on the lower time frame, if you zoom in, you can see that we had another lower time frame SMT with the S&P 500 where NASDAQ makes a lower high and the S&P makes a higher high like this. And so SMTs essentially tell you what direction the market is going to be pushed. These SMTs are essentially the market showing its hand for where it wants to go next. It's telling you what direction it wants to go. Now, in order to understand where it wants to go and not just what direction it wants to go, you want to understand what highs or lows the market wants to target. In this case, you can see if I change the chart into regular trading hours, this will show us all the overnight gaps. These act like essentially magnets, and the market will come and run back to these. You can see that we have one overnight gap here. We have another overnight gap here. And then we have another overnight gap here. And then we have a third overnight gap right here. All of these were giant magnets on the market and were eventually going to push the market lower. Whether it was this morning or whether it was later on, eventually the market was going to want to fill these overnight gaps. And so if I turn this back to electronic trading hours, you can see how the market came down and filled every single one of these. So like I said, I'm going to be giving you information on this channel that no other channel on YouTube will give you. I want to help share the truth about the markets and help as many people as possible. All right, with that in mind, you can see we ended up coming down and filling all of these overnight gaps. So one thing you can do when you end up getting SMT like this is you can measure out the final manipulation move. This can be measured from the body to the wick or from the wick to the wick. Measure out standard deviations. If you don't know anything about this, go check out this video. It'll tell you exactly how to do this. But essentially, it projects out what lows the market might want to target. In this case, the 4 to 4.5 lined up with this low, which was incredibly significant because this was previous week's low. So you can see right when the market opened up, we ended up dumping right down all the way to previous week's low. This was the draw on liquidity the market wanted to go to in the short term. And you can see that we ended up going right down there. So pretty crazy. You can see how the market did end up drawing right down to this low here. Aligned with that 4 to 4.5 standard deviation. Eventually we come all the way down and sweep out the candle bodies of this swing low. When this happens, it is called a rejection block. So the market respects this rejection block. Then as well, the market also ends up respecting a new week opening gap. This was the other key level that the market ended up respecting. After this, the market continues higher. And you can see that we ended up leaving equal highs above. And so with this in mind, I framed this as a possible buy model because with equal highs above, the market loves to come back to equal highs. And you can see the market did end up going and taking those out. As well, not only did we have equal highs above, but we also had London's highs above. And with all this in mind, and as well, the market had changed its state of delivery from bearish to bullish, so it seemed very possible that the market could end up being drawn up to these highs, especially because we held these key levels, this rejection block, and this new week opening gap. So you can see the market ended up coming up to London and sweeping this high as well. So I framed this as a buy model. And then on the lower time frame here, we ended up going into market open. We ended up getting pretty clear A, accumulation, manipulation into this fair value gap, overlapping with this breaker block. You see this breaker block right here on the 3-minute. This breaker block and this fair value gap overlapped. This is where we manipulated into. And then after this, when market opened, we expanded up to our draw on liquidity, which was these equal highs. And so the market at that point stalled out a little bit before eventually coming out, sweeping this low, and we get a really, really nice 3-minute inversion. You could take this up to this was the trade that I took today, where essentially you enter on the close above the old fair value gap. If you don't know what a fair value gap or an inverse fair value gap is, go check out these videos. But essentially you enter on the close above here. Stop loss goes at the low of the old fair value gap's low, candle's low. And then I simply targeted these relatively equal highs over here. And the market ended up wanting to come back there. So this was simply a 1-to-1 trade for me, but it ended up working out pretty well. With all that in mind, let's talk about some other trades you could have taken. You can see Dodgy essentially took the same trade. We had SMT at those lows as well. We're also delivering from a new day opening gap, so that was a nice confluence. We have this trade from Hydra. It's essentially the same exact trade where instead he is targeting London, but it's the same concept. He is not entering on the inversion though. He's entering on the close above the breaker, and you can see that happens right here when we close above these 3 up close candles right here. That is your close above your breaker. And then he, instead of targeting just these equal highs, he targets London highs as well. And you can see we end up going and running all of that. So nice trade from Hydra, good job. I thought the inversion was great to enter on its own, and that was an earlier entry, but you could have entered on this breaker, close above this breaker as well. And he also noted that we did end up getting SMT there, so that's nice. And all right, from here, we ended up coming back up, and after we sweep London's highs, we end up getting this inversion back to the downside. A lot of people took this one. My friend Sotep took this one, and my friend Camel took this one. And this one was nice because you had a clear range right here. The market loves to come back to previous ranges. When we inverse this, I'd probably take this on the 5-minute, but this isn't my preferred style of trade, but if you wanted to, you could take this like Camel did. A trade that you could have taken before, that happened before I got on the charts, was we had this really nice 1-minute inversion here where we get a inversion that happens in 3 candles. This occurred at 8:03 a.m. So this was going into the end of the macro, and we have pretty good liquidity above. You can see how it's just a trend line of highs. The market inverses this fair value gap. You enter on the close above, and then you can see the rest is history. The market goes and runs that low resistance liquidity. With that, I hope you guys enjoyed this video, and I will see you guys in the next one. Bye.